Hi folks, I'm Doug Hensley, President of Hertz Real Estate Services, and I'm coming to you today with our December 2021 end-of-year farmland values update. To begin today, I thought it might be helpful to summarize more or less what I've observed in the 2021 farmland market. It's been quite a market this year. We came into January of this year with a bit of building momentum from the fall of 2020. Demand for farms was really high in early 2021. Inventory of available farms to buy was not high in early 2021. Interest rates were very low and have continued to be very low throughout this entire year. And demand for commodities was building, and we're seeing commodity markets continue to strengthen in the first half of 2021. Really from January through May, both commodity markets and land prices continued to show increasing strength. And when a market begins to show legitimate strength like this land market did this year, there are landowners who've been considering a sale that become just that much more serious. And when you couple a strengthening market with new federal tax policy proposals that would increase tax rates broadly for capital gains, income, and inherited assets, among other things, it seems like anyone who had been thinking about a sale leading into 2021 begin to make some moves to conduct and close their sale before calendar year end 2021, and that's essentially what's happened. The stronger land market and potential higher tax motivation for a sale dramatically accelerated the volume of sales that the Midwestern marketplace has seen this year. And that was beginning to become evident to us back in June and July. That time period matched up really well for many sellers, fortunately, because the early growing season was very smooth and very positive across most of the Midwest, and commodity prices just kept getting stronger through most of the planting season. So early summer, buyers were feeling very strong, and they were becoming increasingly aggressive as well. So it was a situation where more sellers were coming into the market and buyers were becoming more aggressive in their pursuit to buy land. Farmers, individual investors, institutional investors have all been participating aggressively in the farmland market throughout much of 2021. As it happened, this fall, we also ended up growing a pretty good crop across most of the Corn Belt, which has just further fueled this market this fall as a record volume of sales has come to the market. And record on-farm profitability, again, that positive forward commodity outlook for prices in 22 and 23 has also been positive and has many people feeling cautiously optimistic as we look forward. Input suppliers going into the 22 crop year are obviously, they've raised prices on fertilizer, seed, and other inputs, and that's taken back some of the profit margin that we can look at on cash flows for 22 farm production. But under most average production situations, I do believe that there's going to be profit to be made in 22. With a record sales volume this fall, some have started to ask whether this situation with a strong land market like we've enjoyed is sustainable, and it's a fair question to ask. But as I look at the market, it seems like the volume surge this fall was really pretty well absorbed by the market at very high prices. And because I see sales volume actually shifting down in the early part of 22, because again, those who were motivated by the tax situation and getting things done by the end of 21 have already made their sales and taken action. I think we're in store for a steady to stronger land market in 22 because we're going to see volume again fall. I just don't think we'll see the volume of sales in the 22 market that we have in the 21 market. I do think the sales that we'll see will still have many interested parties. Will a little bit depend on the neighborhood, but I think we're going to be in a stable to stronger farmland market in 22. Things that we should be paying special attention to as we flip the calendar to 22 include commodity prices, and maybe most importantly, or just as importantly as commodity prices, is this inflation situation and the interest rate environment that is likely to shift higher, would be my guess, in the 22 calendar year. Farmland has historically performed very well in inflationary environments, but interest rates, if we see a meaningful increase in interest rates, that's going to offset some of the positive that we can see in other places of the market. I also think, as I mentioned, that our early 22 market will become a little more neighborhood specific. Some areas that have had several sales may not see an explosive upside on new sales that come to the market, but other areas where there hasn't been very much for sale at all, frankly, we could still easily see some new record sale prices established in early 22. Overall, again, I expect things to level off a bit price-wise during the 22 crop year. I don't think we're going to see the 15 to 30% increases in values like we've experienced this current year. As to what actually happens, we encourage you to check back in here with us on a monthly basis. We'll be keeping you up to speed and up to date with what we're seeing out in the countryside and reporting to you as effectively as we can. And if you ever have a situation that you're wanting to talk to someone about your farm, we encourage you to reach out to us here at Hertz, toll free at 800-593-LAND. That's 800-593-5263. Again, you can visit us anytime on the web at hertz.ag. We'll see you again in the new year. I want to wish all of you happy holidays and Merry Christmas, and enjoy the end of 21.